Hey, what's up, BK trading family? So I have a good one for you, but it requires some patience. If you don't have patience, if you can't swing trade, then this is not for you. You probably skip this video. But if you have some patience, if you can stick with me, and if you're looking to gain at least 200 plus pips, then this is the video for you. We're going to be looking at CADCHF, and I think a major move is coming up. So I'm going to give you a couple of options, some things that you need to do and look forward to. So let's get right into it right after this. All right, guys. So I know you guys love these analysis videos, and we're typically on point if you look in the past and see what we've been trading. So CADCHF, I start on the weekly. If you've been following us for a while, I always say to start on the higher time frame, whether if it's the weekly, the daily, the monthly, it gives you an overall perspective as to what's going on. So we're obviously in a downtrend, right? We see this huge downtrend. However, I believe that this is the end of the downtrend and it may be reversing for an uptrend. That's the best possible way to swing and even position trade sometimes. All right, so I'm going to show you why. I'm on the weekly chart. Price is in this area right here. Obvious level here, obvious level. But if I go ahead and scroll back, look when last time price was at this level. This is considered a B swing, right? We have this strategy, it's been tried and tested, and we're very profitable with this. This is a B swing. Last time price was here was back in March or back in July 2020. If I go back further, we can see when the pandemic, actually before the pandemic, it started making some lows. Then the pandemic, the COVID-19 back in March 2020, it tested below. But before that, this all right here is COVID-19, this low. But this area right here is the true low, right? And it came back and revisited a couple weeks ago. And since then, it's been ranging. It hasn't moved quite as much. But now, as I go to the daily, let's focus on this area right here. It's starting to push higher. So let me go back to the weekly and show you what I mean. This here is the candle we're on. We're on the weekly. Today is Thursday. You may be watching this on Friday or another day. Look how high it is. And then we have a tail or a wick exposing that it may continue to push higher. Okay. Now going back to the daily time frame, I marked my support zone. I marked my resistance zone, and we have plenty of videos about marking your zones. That is key for any type of trading, guys. Sometimes we have to break away from the indicators. Indicators we can use as confluence. I talked about that in the last video, but it's very helpful. But we want to identify this just by looking at a naked chart with our naked eyes without using any indicators. So this here, I noticed that price came to retest this area multiple times before it pushed to the upside. This is a key level. I'm going to mark this as resistance. Now we are seeing some movement, right? So we see a red candle here, and look how thin it is. It has a nice tail. It started to make some lows. However, I think that this is the beginning of a big push. So if I go ahead and scroll in more, I want to take my ruler and measure from where price is at up to my resistance area. And that's well over 220, 230 pips. This is something that you can get in, and I'm in this trade right now. However, I want to kind of give you a disclaimer. Price often retests key levels. What I mean by that is that price can definitely come down. There is a high chance it can come down. Look in the past here. Price came up, shot back down. Went up, shot back down. This is a key level for the bankers, for the hedge funds, those who actually move the market. And this is a significant price. However, just like everything, it cannot stay the same. So I think since it's been printing some higher highs, that this may continue to the upside. So I wanted to give you that disclaimer. So if price comes back down, you have to have the stomach to know that it's going to start going the opposite way and believe in yourself, specifically this strategy, because we've been doing it for a while. Now, if it does come back down, I'm going to be entering another position so that I can make more of my profit and have more in there. Now, we always tell our students to risk no more than 1 or 2% of your entire account when you're trading so that you can live to trade another day. All right. So I wanted to give that out to you as well. So this is the next major move. I'm on the daily time frame. I believe it's going to push to the upside. Now, there is a possibility it can range a bit. So this can take a few days to maybe a week or so. And that's why I said in the beginning of the video, you have to have patience. If you don't, this is not for you. So you can continue to move on to find maybe a scalping strategy or something. But this is for those who look at the market just like the bankers look at the market. I used to work for the second largest bank in the United States, and I really understand how they trade and how these bankers trade. All right, so it's starting to print higher highs. It can push up to the upside for over 220 pips. If you can't withstand staying in a trade for that long, we can look for the next level. We're going to look for some minor levels. So all you do is scroll out and see when the last time price ranged or is shot to the opposite direction, identifying a level. All right, so I'm going to take my rectangle tool right here, and we can see that price is currently right here. Here's another minor level. The difference between major and minor levels is that major levels are stand out a lot, and you can see these levels on higher time frames with a nice gap. Minor levels, you may see it in small increments. Like here, we see these little touches here, but it touched here multiple times. And then it tends to repeat itself in the future here. So I'm going to extend this minor level all the way over here, and this can be another take profit. So let's go ahead and scroll in. I'm going to go down to the 8-hour time frame so we can kind of look at it better. Take my ruler, my measuring tool, from where price is currently at to, let's say, anywhere within here. It's about 130 to 150 pips. Easy, guys. Like I said, you have to have the stomach to stay in a trade for a week, maybe more. All right, another thing that we want to be careful of is non-farm payroll. That actually is happening tomorrow, and tomorrow is January the 5th. So we want to make sure that we're aware that is for the United States dollar. Sometimes it can affect other pairs. But as we've seen, the ADT employment, it kind of mimics the non-farm payroll. That actually happened today, and the actual happened greater than what was forecast. So if that's the case, we may see a strong push to the upside. All right, so guys, let me know what you think about this. I want to kind of keep this short. I like sending you these analysis, and I'm curious who take these analysis with us. Drop it in the comments and let us know. If you don't drop it at all. If this was beneficial, I would love for you to hit the like button. This lets me know that I'm doing the right thing, that Kenya and I are doing the right thing. Hit that like button, subscribe, and hit the notification bell if you haven't already. Let me know what pair that you want us to see trade next, and we will try to get that out to you. Until then, we will see you in the next video. You have a blessed day.